please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they're off to a mixed start as we speak.
Our belief is that year-on-year mutual fund flows will continue to be positive.
We're going to see a little more diversity this year. Some consumer companies will continue to come to the market.
Tata Sons have scored a victory in the NCLT. The NCLT has basically dismissed the petition that was filed by the Mistry camp.
The most important factor in choosing an investment is actually the growth of that company.
Next 2 to 3 days, we are expecting heavy to very heavy rainfall over isolated areas. But widespread rainfall are expected most parts of the Maharashtra.
So we started the week on an upbeat note, and not just that, actually, Asian peers also doing extremely well. To the front line, indices up about 0.7%.
Well, that's been the day so far. It might be pouring cats and dogs here in Mumbai, but there is no downpour on the Lal Street, so it would seem. It's been up and away. You're watching Closing Bell. We are getting into what promises to be a very, very interesting 1 hour, because this is really the breakpoint zone. This is the level at which we've seen a reversal, not once, not twice, but several times around, which is why let's see if the bulls can indeed take out these levels. If not today, then maybe tomorrow. Global cues have been largely positive today. Most of the Asian markets have had a strong rally. A lot of the markets in Europe are also looking at green on the screen. The levels are important. Let's just pull up some of the numbers. The Nifty over the last 2 or 3 sessions has already scaled some of the congestion zone around 10,830 to 840, 850. You can see those levels, they've already been scaled, how we've built up consistently and crossed those earlier barriers. The next barrier now comes in around the 10,890 level. Last time we were there, that was on the 13th of June. And if that can be scaled, then obviously technical chartists will tell you this market is then straight away going to take aim at the Karnataka election day, post-result day peak, which was closer to 10,920, 929. There we go. So those levels are still a further time into the distance. The question is really whether there can be a sustained breakout or whether it's going to flatter to receive once again at this 10,850 mark. I'm Surabhi Upadhyay. Joining me on the show this afternoon is Prashant Nair. Prashant, interesting. One would have thought that it would have been completely rained out looking at the city around us today. But the bulls have chosen this day to go out and really flex some muscles.
Oh yeah, it's a great start to the week. Yeah. I mean, you sort of pointed out levels, etc. So here's just 30 seconds on what globally this is looking like. So it's a strong start, not just here in India. So I mean, don't forget that around the world things are looking pretty solid. Be it Asia, you look at European trade. So it's a strong start to the week, essentially. The MSCI World Equity Index itself is at a 2-week high. So it's happening not just here. Dollar weakness is a big factor. I mean, underlying, it's showing up. I mean, it's showing up in commodities. You look at copper prices, for example. You look at emerging markets. Even the yuan, which had sold off quite a bit, is recovering. So the dollar yuan rate is actually moving lower, which means the dollar is depreciating. There has been no headlines on the US-China trade war front over the weekend. I mean, that's good news. And the second point is that, you look at what's happening to the pound, and it looks like that's a very specific headline out of the UK, which is the Brexit. The minister in charge of Brexit, negotiating Brexit, has essentially resigned over the weekend. And that's leading to speculation that we actually may get a soft Brexit, not a hard Brexit, which means that, everybody can be friends and happy and all that even after Britain leaves the EU. So it's leading to the pound strengthening, and softer Brexit has got implication even for Indian companies. I mean, Tata Motors, for example, last week you had that headline from Financial Times where the CEO essentially told told authorities in UK that a hard Brexit may cost it a lot of money. So I'm just tracking what's happening globally, but I think the underlying thing is dollar is weakening and everything priced in dollars is doing a bit better.
Okay, well, we've got a lot of ground to cover. This interesting Monday afternoon. Let's tell you what's lined up on closing bell today. The markets are trading at the upper end of the range. So is the trend going to break out? We asked that question to our chartists. Also discuss the way the fundamentals are stacking up with our fundamental experts, Mr. SP Tulsian of sptulsian.com, Mehraboon Irani, MD and CEO of Ginny Gems Consultants, and Mayuresh Joshi of Angel Broking. Banking stocks are leading from the front today, so we discuss that. Now the sectoral trends, the market outlook with Sandeep Raina, Associate Director of Edelweiss Investment Research. And as always, lots of trading ideas coming your way with our technical experts, Ashwani Gujral and Mitesh Thakkar.
Okay, so what should you be doing in the last 60 minutes of trade? Ashwani and Mitesh are with us to tell us exactly that. Gentlemen, good afternoon. Thanks very much. Ashwani, you were talking when we last spoke. You said go long, and it's kind of paid off. Where does the market find any resistance, if at all? Nifty is up 82 points. What would you be doing?
See, first of all, I don't get the feeling that this is global. DAX is up 10 points, FTSE is up 20 points. That's where the trade war is, right? This is something local, because the kind of move that you are seeing, and that too at the upper end of the range, there has to be some sort of tailwind here, because techs are up, banks are up, infrastructure is up, all sectors are higher. And by, all of these European markets opened higher and have come off. We would have come off by now. So there is some strength which is in the market, and what's happening is on the futures, the bears are ready for a short trade, because the bank Nifty futures is down 40 points. Nifty futures is hardly up a 1 point premium or something, but the market is still not coming off. So that kind of gives you a hint that this time you could be lucky on the upside, and I wouldn't be surprised if the last hour, even from here, gives you gains on the upside, because bears have tried all day and they haven't succeeded in even getting one sector in the negative. So for the last hour, we are positive, and from here, given that it's a 2-month range, if we start to break out, then it will be a fairly large breakout. So that way, short positions is not a good idea. Whether or not the market gets above 10,850, that's besides the point. But right now, the idea should be that you should be on the upside. Plus, financials are doing very well. So whenever that happens, the market tends to show follow through. For the moment, Yes Bank is a buy with a stop of 360, target of 375. Larsen is a buy with a stop of 1270, target of 1315, and Simplex Infra is a buy with a stop of 450, target of 475.
Okay, some infrastructure names also creeping up on Ashwani's list. Just a follow-up question, Ashwani. Right now, what's a better long trade? The Nifty bank, individual bank stocks, or the Nifty itself?
I think Nifty bank is showing you greater traction. But I don't think even buying the Nifty is a bad idea, because the number of legs which are supporting the Nifty are way too huge. So this is not the kind of market where IT is down, banks are up. So this sort of a market, once it breaks out, the momentum of short covering is likely to take it much higher.
Okay, so 85 on the Nifty, 10,858 is where we stand at. Mitesh is with us as well. Mitesh, good afternoon. What would your trades be?
Yeah, good afternoon, Prashant. So I think the positive bias still remains, though we are now wondering if Bank Nifty will give a breakout above this 26,800 zone. It's hit those levels many times and then come back from there. So while the Nifty is just above, I think the Bank Nifty should be the next index to be watched. If it starts getting past 26,800, I think 27,200 could be tested. So that's one. And apart from that, I have 2 long calls on stocks. Bharat Forge is a buy with a stop at 643. Look for targets of 675. And Just Dial is a buy with a stop at 582. And look for targets of 615.
Okay, well, we also have Mr. Tulsian and Mehraboon Irani joining in the conversation now. Afternoon, Mr. Tulsian. So, as even our technical experts are telling us that the focus is back on the financials, they're firing on all cylinders. Now, if you're talking about some of the, tier 2 banks, and actually not tier 1, tier 2 only in terms of relative age, some of the banks like an IndusInd or a Kotak or even a Yes Bank for that matter, on a fundamental basis, how would you place them in your favored pecking order from an investment standpoint?
See, Surabhi, in fact, I will place all these three banks along with the banks like maybe Kotak and all that, since you have asked me to differentiate between tier 1 and tier 2. I agree that if you really look from the market cap point of view, probably the ICICI Bank, Axis and Kotak are way ahead, while the IndusInd Bank and the Yes falls in the smaller category, but I will place them all in the same category. If really I need to take a call on tier 2 banks, then probably I'll go with the RBL Bank, Federal Bank, DCB and maybe Karnataka Bank, because these four are really seem to be quite having a good upside potential with very good asset quality. I'm not referring that in terms of the quarter basis. One may argue that Federal Bank has given a big disappointment, but this share now ruling at a level of 84, 85, I think seem to be having good upside potential. Similar is the case with DCB Bank. DCB Bank have always carried the premium in terms of P. And if you really take a call on expected EPS of closer to 10 rupees and the better asset quality which you have seen in Q4 is going to see continuing for the FY19 also. So maybe with an expected EPS of about maybe 10 or so for FY19, the share is available at a P multiple of 17, 18. Come on the Karnataka Bank, come on the other RBL Bank, again you have the growth prospect. So all these tier 2 bank kind of things, maybe one can consider this four stocks, but otherwise if you really want to take a frontline call, then obviously the pecking order will be HDFC Bank, Kotak Bank, IndusInd Bank, Yes Bank, and then maybe the fifth one could be, or whatever, this 4 or 5 banks will be the same pecking order.
Let me get in Mehraboon Irani as well. Mehraboon, good afternoon. Thanks very much for joining in. I mean, your thoughts broadly, first of all, on what we're seeing in the market. There's a bit of recovery.
Well, I would put it this way, that the trade war, which was something which was a rhetoric and one never knew how much it will possibly go up to, I think now the market has right now taken it in its stride and the market wants to move ahead. Also, as far as the fall goes or the correction goes, let us not forget the fact, let us in fact accept the fact that nearly 95-97% of the market is possibly at a level of a Nifty below 10,000. So a large part of the damage seems to have been done. Now the market wants to just move ahead. Shorts are getting covered, and honestly I will not be surprised, and I don't want to justify it fundamentally, Prashant, but honestly I will not be surprised if you and I and others possibly around us over the next 2, 3, 4 days start discussing the possibility of a new high coming soon. Is this the time possibly to try and build a long-term portfolio? My answer has been no. But at the end of it all, I have always advised my investors to adopt one of the two strategies. One strategy is to buy stocks which are otherwise good quality stocks. And my friend Mr. Tulsian mentioned one of it, Federal Bank, maybe an Ambuja Cement, maybe a Bharat Electronics, stocks which are not going to fall anymore, but which will ultimately go up. Or buy into companies or stocks which have done very well and which have corrected sharply, but the companies continue to do well. And just go and buy into them, and that is what ultimately is making investors possibly earn some returns in good quality stocks. Now we also have to accept one more thing, that there has been a large impact cost which has happened, especially in mid caps and small caps, when nobody wants to buy and people just want to sell. They want to bring down the leveraged position. They have suffered reverses in F&O position. Brokers are asking them to make the payment, so they are trying to sell the mid caps and small caps, which has happened over the last 1 to 3 months, and the impact cost has created a lot of damage in some of the stock values, and now the reverse is happening. The impact cost is working out in the reverse when people are wanting to buy and people are expecting the markets to rebound. Everybody wants to buy, even if it's a short-term bet, and the stocks are going up very sharply. So I personally believe this could continue to happen, but at the end of it all, investors need to learn one lesson. And the lesson is, don't try to buy the cats and dogs expecting them also to participate in this rally. Wherever this rally takes us, whether we see a new high, whether we discuss a new high, it ultimately doesn't happen. But at the end of it all, ultimately it is quality which pays. To adopt one of the two strategies, go in for good quality companies which cannot fall further, or go in for good quality stocks which have retraced a large part of the sharp rally which they have seen over the last 12-18 months, and which have come to levels where you can possibly say, well, I am buying it because the downside is limited and the upside is going to be much more over a period of time.
Okay, the gas stocks are a bit excited this afternoon. Let's pull up the city gas distribution plays, IGL, Mahanagar Gas. There's a large tender that's in the works. Anyway, they're bidding. I mean, there are several districts across the country where they're rolling out these piped gas networks, and many of these companies are bidding. Mahanagar Gas close to the day's high, as is IGL. Ashwani, any interest in these stocks? And then the wider question, the point that Mehraboon is also making, if indeed the market is going to take aim at higher levels, are you just better off sticking to names like Reliance or Bajaj Finance, etc.? Or should you look at some of these, names that are flaring up in the mid-cap market also now?
See, basically, in case, say, the opinion poll is that, it's a hung parliament, etc., would at 99.50, prices won't be lower on mid-caps, they will be. So my idea is to buy those 15 to 20 stocks which are trading at all-time new highs: Jubilant Food, Bajaj Finance, Bajaj Finserv, Avenue Supermart, and maybe if you want to do a mid-cap ETF, which keeps you safe from these, 50%, 70% declines, and then move from there, because the appetite of making fresh portfolios is a bit low right now. I would much rather do it closer to the election than right now and, risk all kinds of volatility.
Okay, we will take a very quick break, and we are right back with, news is taking a break with news that 80 points still on the Nifty, 10,853, and things are looking pretty strong at this point. We are back with Sandeep Raina, is Associate Director at Edelweiss Investment Research, with some ideas of his own. We are back in 2. Okay, 80 points on the Nifty. We're at about 10,853. Actually, there is a long list of names which are doing very well. We've been discussing a few of them, and this is broader market. So let's just actually put a few of them. Sterlite Tech, let's begin with that. So it's seeing a pretty large move. Sterlite Technologies, 8.5% actually off the highs, even though it's up almost 9%. V-Mart is another one. It had a very good last week, and V-Mart is up again this week. Beginning of the week at least now. Jain Irrigation is another one which came up on my list. We discussed Federal Bank and Karnataka Bank earlier before we took that break. Both of them are doing well. Mahindra Financial Services, so that could also come up. DCB Bank is another one which is coming out up on my list. Dilip Buildcon, I think it's past the 700 rupee mark. So it's not 5%. It's 5% now. So 722 actually. So it started recovering the second half of last week. The low was almost 600 rupees and at about 722 now. And then there is Indocount, ICIL, which is looking up, DB Corp, DCM Shriram. Some of these names have been beaten down quite a bit, and they're coming up strongly. All with decent volumes. There are lots of illiquid names as well which are jumping around, not mentioning those, just sticking with the large volume ones. I'll highlight some losers as well in a bit. Sandeep Wagle is joining in on the show. Sandeep, thanks very much. Good afternoon. What would your trades be? What would your thought process be? We just heard Mehraboon before we took that break say that in a couple of weeks he wouldn't be surprised if you're actually talking about new highs.
Afternoon, Prashant. I think today's action does suggest that I am definitely looking for some more upside. And stock specific, I would go with a buy in a IGL, stop loss of 261, target of 270, and a buy in a Bharat Forge, stop loss 643, target 675.
Okay, Sandeep, thank you very much for some of those names. Well, the market's still holding on to most of the gains, and today is one of those days when it's not just the large caps that are moving higher. The mid-cap market has its own set of winners today. We just outlined some of the gas stocks. Now take a look at something called Make Money Organic Specialty Chemicals play. Stocks up 9-10% suddenly and moving higher. Kiri Industries from the specialty segment as well is up about 4%. Mr. Tulsian, you track these specialty companies quite closely. Any views? Any recommendations on either Make Money or Kiri?
See, we have extremely positive view on Make Money, because if you take a call on Make Money, they are into specialty chemical, they are into dyes and pigment, and they are into the agrochemicals. In fact, it's a combination of all three. And if you really take a call, the stock, now I don't know the present price, but about 85, 88 rupees, I think holds extremely good potential, because if you take a call on all three sectors are seen to be having promising growth outlook, maybe considering the domestic factor or maybe considering the Chinese factor. Coming on Kiri Industries, we won't be taking a positive call now beyond now, because in the die intermediate space, you have the better opportunities available. The only die star case, which has gone in favor of Kiri Industries, the valuation will be decided by the valuer, and unless until we know the quantum for that, because the Singapore order has come in about last week, and we need to in fact know that what kind of amount the company will be receiving, and pending that, I don't think that there is, because you have a better options available in the die intermediate space, maybe like Akshar came, or maybe like Bulgaria Industries. As a disclosure, I am on the board of the company, or maybe the companies like Bodil Chemical, because you have 3 or 4 companies available, and this sector per se is doing again quite well because of the pollution factor, closure of units in China and all that.
Mr. Tulsian, any thoughts on these, companies like Sterlite Tech? Companies.
See, Prashant, in fact, we have been giving positive call on this stock, particularly. In fact, on Friday afternoon and Thursday afternoon also, I've said that we give a positive outlook on Sterlite Technology, because the growth which is seen on the bottom line, probably FY19 will see an consolidated EPS of over 10 rupees or maybe 11 rupees. One may argue that the 30 times P multiple is seen quite high. But I think that considering the growth prospects, of the sector in which they are operating, and apart from Sterlite Technology, in fact, we have been giving a buy call on the other stocks also related to the telecom, which are largely catering to the telecom sectors, either in the form of fiber, optical fiber, or maybe cable, or maybe the services providing to in that sector, like Tejas Network, Himachal Futuristic, Universal Cable, Vindhya Telelinks, CMI Cable, KA Industries. In fact, they all are catering to this sector, which are comparable peers of Sterlite Technology. So yes, keeping positive view on Sterlite Technology, but equally overweight on the sector, along with the names which are stated operating in this field.
Mr. Tulsian, this would be, we're talking about optic fiber, right? The opportunity, whereas others would be different kinds of cables as well. So this is...
No, I'm talking of optic fiber and the services which are providing, like Tejas Network and Himachal Futuristic are providing
those
telecom
two
support services. Yeah, that's right. Yeah, that's right.
Okay. No, would Sterlite be, so it's absolutely in the right sector. We heard what Jio has been talking about in terms of investment and fixed line broadband and all of that. But is Sterlite, the best position in that space, or, is it a marginal player? Just trying to understand. Do we have large unlisted players in that sector? Yeah.
No, they are, Prashant, they are in fact the right player in that space, to capitalize on that particular sector. And I don't think that you have any comparable of this size, they can capture the larger portion of the pie of that sector, or that growth sector, yeah.
Okay, in fact, Sterlite Technologies is one stock on which we have a consensus from both our experts. It's a thumbs up from Mr. Tulsian. And Mehraboon, I think you also quite like this company. They've recently done a small acquisition as well. What would you expect from this stock over how many months? Is it a long-term pick for you?
I would say that my very conservative estimate for the stock is a share price of 500 rupees over the next 12 to 18 months. I think I'll go back to CNBC shows of mine. I think 18 months ago it was 120, 130, and I was very vocal on it. The share touched a high of 410 just a few months ago and reacted sharply to around 280, where I personally felt it should be bought into. 280 becomes 260, but now it's 310 and 350, and we are discussing all over again. I think let's understand Sterlite Technologies as a clear one of the 8 integrated players in the world in the complete optic fiber chain. It manufactures optic fiber, it manufactures optic fiber cables. Its order book is roughly around $52 billion, which is at least 73% higher year on year. And this is excluding the $35 billion order which it has got from the Indian Navy. I'm not counting that. Now, if you look at this acquisition, Metallurgical, which is an Italian company, it is giving it an entry in the European market also, where as of now, it never had any manufacturing facility, and it is exposing now itself to the tier 1 customers of the acquired company. If you look at the financials of this company, I personally expect this company to end 2019-20 with a turnover of 5,000 crores and a bottom line of not less than 620 crores. which translates into an earnings of nearly 16 rupees from the present 8 rupees. So I'm expecting the turnover to grow and the bottom line to grow twofold over the next 2 years. At 16 rupees, just give it a valuation of 30 times for a company growing at the pace at which Sterlite is growing, and you get a very conservative 480, 500 rupees coming for the stock. So if the market falls tomorrow for any reason and Sterlite is 270, 280, it may come down to. But at the end of it all, if I know at 300 or 310, if I'm seeing a price of 450 or a 500 coming, I think this type of stocks are stocks, growth stocks, where I have been advising my investors to possibly buy into, look out for every opportunity to add to their positions in such type of companies and not bother too much about what the indices are doing. So Sterlite is a classic case, and I believe at the present level also there's an at least 50% upside coming over the next 12 to 18 months.
Okay, all right. So that's Sterlite Tech. On that note, we'll also thank Mr. Tulsian for his time, requesting Mehraboon to stay on for a few more questions. Also joining us today in the conversation is Sandeep Raina, Associate Director of Edelweiss Investment Research. Sandeep, good to have you join in on an interesting day. The market is looking extremely buoyant for now. And I think the question that everybody has on their mind is that are fresh highs even possible this year? What would you say?
So for the market, I think let's divide the market in Nifty and then the other stocks. I think let's ignore Nifty because the way the Nifty is moving, nobody is able to understand what is happening. But I'll give you a different analogy altogether. In Nifty also, if I try to divide the top 15 stock and bottom 35 stocks, they tell us a different story. The bottom 35 stocks are telling us that the market is down by 8%, those 35 stocks. It's just a balanced 15 stocks which is taking the market up because on an average they're up 11%. And those 15 stocks actually form 70% of the Nifty weightage. And that is the reason that you look at Nifty at the upper this thing. Now coming back to your large cap and small caps and mid caps, look at what has happened there. In your small cap index, which is now a function of 845 stocks, 85% of stocks are negative year to date. So that is telling us a different story altogether, and that's I think the reality because most of the market participants are in those kind of stock, which is your mid cap and small cap, and that's why we see the market is not looking that interesting. Having said that, I think yet again, which I tell always, we should look at market stock specific, and there are a lot of stocks which are looking interesting because the earning upsides are still there. They have corrected 30-35%, and then I think we should be buying those.
You know, Surabhi, there are 22 stocks out of the BSE 500 list of stocks which are up over 30% this year, YTD. 11 of those 22 stocks are IT stocks.
Yeah.
Right? And which are the others? Just if you can put these names up. I mean, V-Mart, it's buzzing today. Jubilant Food, I mean, after Friday's fall, it's recovering. HEG, there is Radico, there is Kotak Bank, there is Lakshmi Machine Works, and there is Britannia. I mean, there are 2 or 3 more. But I mean, take solutions now. It's pharma or IT or pharma IT services companies. I'm excluding those. But these are 8 other names which are up over 30% this year, YTD.
That's calendar year.
That's
so far in 2018, yeah.
And only 22 names over 30%.
Yeah.
And so unlike the year that we had last year, right? I mean, last year, I mean,
whatever you touch would turn to gold, almost.
Last year was, I mean, I think 67% of the BSE 500 stocks were up over 30%.
The mid-cap index itself moved higher, 45%. I mean, individual stocks just did much, much more. But Sandeep, that's the question. Let's take that forward. Are you looking at mid-caps right now? Because the most common sort of logic that's floating around in the market that we keep hearing is, listen, stick to large caps, stick to quality, stick to stuff that's already discovered. That's almost become a very common herd mentality phrase in itself. How are you approaching the market?
Trust me, after 2017, when you would have touched anything, that would have turned gold. But that is not the normal market is. If you see history of 10, 15 years, 1 year is always like that where you touch anything and it just becomes gold. But then reality is different. But this year also is not reality, it's the other way around. But the reality is what we have to look at is just look for stock where the earning growth are still there. So I was just looking at the numbers of BSE 500 for FY18. You know, if we just try to take out the PSU, because PSU itself did 82,000 crores of loss. But we found that pockets of, from 10,000 to 50,000 crores or 5,000 to 10,000 crores, these kind of bucketing we did. So those segments actually grew at 35% in those buckets actually. In fact, 5,000, 10,000, the growth was I think some 24,000. And of course, I have taken out the Reliance Com because Reliance Com did a loss of I think some 23,000 crores. Because so that's how it is. Now, look, I think there are a lot of companies that we can look at which are giving us decent kind of revenue growth. Like in this quarter also and in the previous quarter also, we saw companies growing at 15, 20% even more. Then I think we should have to just look at those companies. Like I was looking at Mayur Uniquoters. Now Mayur Uniquoters in the last 5 years have grown at 8% on the revenue side, but at the PAT side they have grown at 20%. And the function is because they have increased their operating efficiency. The EBITDA has moved up from 20 to 26%. And I think we have to look for those kind of stock, and the stock is available at just 12 times FY20. And the ROC, the core ROC of this company is closer to 50%. And they are putting up a new plant, adding 150 crores of gross block, which will at the peak give him 600 crores of revenue over the next 2, 3, 4 years. And the ROC will be maintained. So I'm saying we should look at those stocks which can give us these kind of earnings. And I think still the return can be made.
You got one more idea, right, Sandeep? One was Mayur Uniquoters, and I think
yeah. So one is we were looking at paper as an industry. So in paper we like JK Paper a lot. I think paper, the entire space is looking interesting because India's competitiveness in global world has improved, and the reason for that is because your pulp prices globally has gone up, and companies which have local sourcing where the pulp price is not increased has improved significantly. Second big thing is that your rupee has depreciated. So with that, what has happened is your export has become more competitive. And in fact, what has happened is India used to import around 1,000 crores of paper every month, which has come down to 500 crores just because of rupee problems. So all these factors have actually led to a lot of these paper companies doing very well, and I believe that they will do further well because your paper prices are kind of stagnant and your domestic pulp prices are coming down. So this has led to improve in margin. So if you see the numbers of most of the companies, the operating profit has improved despite Ballarpur, which was kind of shut for some time, improving his production further. So I think this is another stock that can be looked at, and it is available to as a 3.5 EV EBITDA. Generally they trade at 5 to 6 times EV EBITDA. So it looks interesting to us.
Lots of stocks going towards the highs of the day. Concor, the gas duo, the twins, IGL and MGL, we've already pointed that out. And then you also have some names like M&M Financial sitting on very, very handsome gains today, 4.5% up on M&M Financials as we speak. So, Sandeep, before we let you go, on financials, how are you approaching things? Sticking to NBFCs or opting only for private sector banks? What's the call?
See, we are very clear. We have divided the entire BFSI in 3 parts: PSUs, private banks, and NBFCs. PSU, I think we have not been touching since long, and I think we'll still try to be avoiding these companies. On the private side, I think we will be just choosing the large cap, which are your 3 big ones. That is your Kotak, then HDFC, and also your Indus. That's what we target. And on the NBFC side, I think there are a lot of stocks which should be looking at now. So let's say we were bullish on Canfin, although it didn't work well. But I think at 350 levels, why should somebody not relook at Canfin? Then why not look at PNB at 1,100 rupees? I'm saying I think on the housing finance side, we should kind of relook at these numbers. I'm not saying that I'll be buying it right now because there are a lot of headwinds that are happening on this side, but I think we should be relooking at that. Then the CV space looks interesting, like Chola, Shriram, which had corrected a lot despite that 700 crores of issues that we're talking about in the market that company will have to pay if this or that thing happens. But I think these stocks should be looked at. Maybe we'll get a good price. Like for Shriram, we got a very good price, but actually the stock went up by 12-15% in next 2-3 days.
Just put up SRF if we can. I think that's moved up. I didn't see it on my screen earlier, but it's coming up as a big gainer now, 5% higher. Yeah, that's happened just now over the last 5 or 6 minutes or so, and it's a very sharp move. 1728 on SRF. I mean, I was looking at the price chart. The high was about 2450 or so. From there, it fell to about 1640, and it's basically coming up, 84, 85 rupees now. So it's a pretty big one. Mehraboon, I mean, do you track SRF? Any thoughts?
No, honestly, no, Prashant. I track this chemicals sector as such, but SRF is not a stock which I have been covering.
Sandeep, any thoughts on this one? SRF?
See, if you ask me, SRF, actually there are two businesses. One is the very good specialty business where the company is doing well and investing a lot of money. The second business is, which is your packaging and film business. There the company is actually investing a lot of money there also. But that is a low ROC business, and that's how this company always gets a discount. However, talking about the business which is a good business, that is your specialty business, I think the company will keep on doing very well. It's just that off late there were global issues and the company were not able to perform. I think given after one quarter, it will come back and they will start again doing very well, for, at least in this business. But having said that, will I buy the company at this price? The answer for that is no. Maybe I'll just wait for a few more quarters to see the numbers.
Okay. All right, Sandeep, we'll leave it on that note. By the way, some news on Dr. Reddy's coming in. That stock's again approaching the highs of the day. It's been a strong stock today, actually. They are in a marketing alliance for an epilepsy drug. We don't have a monetary value to it just yet. All we know is that it is going to be a marketing alliance of sorts. Well, that's the stock climbing to the highs of the day. We need to take a very quick break on that note. But on the other side, it's the last half an hour of this Monday afternoon. We'll get you the last half hour trades, BTS, TST, BT, whichever way our analysts cut it.